morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, February 26th. Well, two-sided trade here overnight as we work closer to the pause. However, we're seeing some strength develop now in the feed grains. Corn is now turned 1 to 2 better. Wheat prices also 1 to 2 better in Chicago and in Kansas City, while Minneapolis still lags down a penny or so. Bean complex also firming up a touch, still a penny lower in the beans, 30 to 40 lower in the bean oil, while meal has turned about $1 better. Fresh news is mostly limited as we await the February outlook conference data here later in the week and our weekly batch of usage figures. EIA will report the weekly ethanol production data later this morning. Production is expected to have dipped to about 308 million gallons last week, down from 319 the previous week due to harsh weather conditions across much of the Midwest last week. Export sales out on tomorrow, and Friday we'll also get a monthly update on bio and renewable diesel production, along with the feedstock usage data. This from the month of December. I suspect production might be a little bit inflated as producers work quickly to take advantage of the expiring tax credit. Reuters poll does show corn acres are expected to expand about 3 million in 2025 to 93.6 million, with production jumping 535 million bushels to 15.4 billion. Ending stocks are also expected to rise about 370 million to just over 1.9 billion bushels. I'd caution reading too much into the outlook data. However, USDA has overestimated ending stocks in this Feb outlook the last 5 years and 11 out of the last 15. And soybean acres are expected to drop 2.7 million to 84.4. Production and ending stocks are not expected to change a whole lot from the 24-25 numbers. In fact, the average guess on ending stocks at 380 million bushels exactly matches the current USDA forecast for 24-25. Here too, the USDA has overestimated ending stocks 10 out of the last 15 years in the month of February in this outlook conference. Wheat ending stocks expected to jump 35 million to 830. Ending stocks have proved to be above the USDA forecast 10 out of the last 15 years. South America, really not much change with weather there. Dryness across the center south and northeast growing regions of Brazil may hinder the late developing soybeans and first corn crops. Wetter conditions in Mato Grosso likely to slow the remaining soybean harvest and second corn crop plantings. However, following the recent big strides that have been made, I think the moisture will prove beneficial longer term for the corn crop development. Heavy rains in Argentina across the central portions of the country there could prompt some flooding issues. Dry still for much of the northern growing regions. Inside trade for March and May corn here overnight, that after consolidating a bit after 3 days of consecutive losses. We estimate speculators have shaved about 30,000 contracts from their big long positions, however, still rather significant at about 320,000. Look for good support here above 480 in this May contract here with strong demand here for U.S. corn. Inside trade for May beans. Yesterday we did make a new monthly low, however, held support at the 50-day moving average. Bean oil is back under 46 cents. Oil World does expect palm oil production will rise 1.1 million metric tons in 2025. Inside trade for both Chicago and Kansas City wheat overnight. Minneapolis did drop to a fresh 3-week low. Support there for Minneapolis comes in at 623, the 100-day moving average. So I hope everyone has a fantastic Wednesday. Thank you for listening, and we'll touch base tomorrow morning.